Good evening, everybody. All right. Hope everybody's having a nice spring evening. Hope everybody's making some good money in the markets. As we can see, the Dow is doing exactly what we would expect it to do based upon the candlestick patterns. Morningstar signal brought it back up through the T-line, and the T-line's been holding steady or been acting as support. Today was a good day. Still anticipating that we're going to at least try to test the recent highs in the Dow. Plenty of room left in the stochastics for more upside. At the same time, the NASDAQ looked like it closed at a new recent high, making this uptrend still in progress. Also some more upside in the stochastics. And the S&P 500 getting very close. And notice what type of trading we had today. Somebody was asking about a double doji. A double doji is basically when you start seeing dojis and one pulls back. Notice that this pullback is not very convincing. It's a doji type day. If they open up positive the next day, they're going to take it up. That means the bulls and the bears that we're fighting in here, the bulls have won. They're still taking it up, which would have been kind of assumed because the stochastics are still heading up. So tonight, we're going to just go through some basics. We got a lot of new people in here. This is the place to ask questions. Ask questions as we're going along if you have them. If it becomes too difficult to answer, I'll just say we'll do it at the end. And I'll stay after we're done, as long as people have questions on candlesticks and stocks. New people don't ask about individual stocks. When I tell Jim to do the double line, that's when everybody starts typing in the signals or the symbols they want to have analyzed. So right now, the crude oil prices are still moving up out of this big dip, but definitely watch to see what it does once it gets to this resistance level. Natural gas still has been in a slow, steady uptrend for a while. I would suspect with the amount of supply that we have in the U.S. right now on natural gas, there's a lot of innovations going on right now to use natural gas as your as a source of supply of energy, which puts, again, the U.S. market in a very good position where if they start converting energy from coal to natural gas, which is a very clean burning product, we might be back in the catbird seat again. Yeah, anybody having problem with visual, yeah, just log off and log right back on. Sometimes there's little hiccups in connecting. Gold also moving up, but as you can see, this is the advantage we have with candlestick analysis, is even though it's in an uptrend, they're selling as soon as it opens, or selling after it opens. So it's not a real strong uptrend just yet. Okay, good, ML. Let's see, silver. Silver also up above the T-line after kind of a kicker gap up. It's in an uptrend as long as it stays above the T-line. But as you can see, silver as well as gold has been in this downtrending channel. So if you're buying it long, you've got to be very conscious of what happens once it gets to the resistance level, and watch for continued selling once it gets to the resistance level. Live cattle is trying to bust through the 50. We're not quite up in the overbought area, so there's still some possibility of pushing through. If it starts selling off, especially if it comes back down through the potential shooting star, you close it out, and then you see what it does if it supports on the T-line. Feeder cattle Had some very big days, but now it's also pulled back. Now this little trading right now is after hours tonight. Notice once it got to the resistance level, it's pulled back, but now we have to see whether they hold here at the T-line, or they could be in a T-line crunch, that if this pushes it back up through, that means there's going to be some more upside. Okay. Doji gap up is, I'd probably doing a quantitative analysis of which signals work the best and most frequency. It's the doji in the oversold area, followed by a gap up, followed by any candlestick signal in the oversold area, followed by a gap up. Let's see. Soybeans had a big move early in the morning, and now looks like they're starting to trade it back up again after hours. Let's see. Wheat. Wheat also had an update, but not a reversal. There is a bullish engulfing. Now there's a confirmation, and we're just about ready to break out through that level. That may tell us that wheat is heading up further. And let's see, what else do we look at? Bond prices. Bond prices are still steadily moving up. Interest rates still staying low. The dollar. Whoops. I better check to see whether I did the bond prices right. Okay. And the dollar. Dollar rolling over a little bit, which means the British pound is up a little bit. Not by much, though. The euro is moving up. And, see, the Swiss franc trading positive. And the Japanese yen trying to base in here a little bit. But the Japanese yen, as you can see, has been in a downtrend for quite a while. Let's see, I'm sure we're forgetting something over in the, let's see, cocoa. Cocoa's hit the 200-day moving average resistance level. Sugar, trying to do kind of a little scoop type pattern, but nothing yet that would make me want to jump in there. So, lean hogs doing some backing and filling right now. Potentially doing a double doji type day. Not quite up in the overbought area. But notice where it's getting a little bit soggy. Right at the same level it got soggy before. So this is usually an indication that they might bring it back down to the T-line and then do a J-hook from there. Corn. Yeah, corn had a big, huge day today. I caught some of the soybean move last night when it was opening positive. It was trading right up here. It was above the T-line after a big bullish engulfing. And it moved up nicely today, so made some good profits on that one. All right. With the market moving up slowly or steadily, and again, the T-line being a very effective trend indicator, it's a healthy market. Moves up, pulls back. Moves up, pulls back. Moves up, pulls back, and we're starting to move up again. So where's the upside? First test right here. Second test, if you draw a line right up through the tops, that's where the next move should move to, which means we could have another couple weeks of upside. Right now I'm using CQG. I also use Metastock. I also use TCNet or TC2000 for the scanning, and NinjaTrader. NinjaTrader is pretty much the same as this. So I usually use these because I can move them around a lot quicker than some of the others. Unfortunately, this one's expensive. I pay like a little over $1,000 a month for this one. All right, some of the stocks that we've been in is Maxwell coming out of a fry pan bottom. This one you stay long. Now you've had a left-right combo, and somebody was asking today in the chat room, what's a left-right combo? Left-right combo is when you have a doji followed by a bearish engulfing signal, or a doji followed by a bullish engulfing signal. But you also have a fry pan bottom, so anytime you see a candlestick sell signal, you need to see confirmation, which the confirmation in this case would be a close back below the T line. Greg, I wouldn't be too surprised to find out that some of these other traders right now, because we do sessions on their sites, aren't using the T line because we were showing the T line to quite a few people. All right, the double doji is when you have that indecisive pullback. So you start a good strong uptrend, then you've got an indecisive day, an indecisive day. Now notice the indecisive days are on the pullback. That means there's profit taking, but the bulls are still around. Then if you see it open positive after the double doji day, that's usually going to act like a doji sandwich, where this day will approximately be the same range as this day right here. So DDD, even though, let's see, I guess earnings are coming out tomorrow or sometime soon, is still in a nice uptrend. Rovi is another one that we had been recommending for a while because it came out of this nice little scoop pattern and hasn't done anything that told us that there's a drastic sell signal. There was a potential right here, but this is the advantage of also having the T-line as an indicator. You're in an uptrend as long as you don't see a candlestick sell signal and a close back below the T-line. Yeah, the 21 EMA is probably not too far away from the 20 simple moving average, which is what we have on our charts. Let's see. ABMD is doing what I call a T-line crunch. Notice how they can't close it below the T-line. They can hardly even trade it below the T-line. But they're coming right back up into this resistance level, which means if they open this positive, the T-line has crunched it up through that resistance level. You're probably going to see a good pop to the upside. Herbert, hang on to your questions until we hit the double line. We'll get to them all, don't worry. And let's see, VHC is a example of that we want to, they've got this kind of rounding bottom, and you don't close it, even though we've had a candlestick sell signal, we're not in the overbought area. So the probabilities still say we're in an uptrend as long as it doesn't close below the T-line. Now, on the other hand, if they open this lower and start trading it down below the T-line, that's not the strength we want to see. You close out the position and then move someplace else. Yeah, we use Flow Stochastics 1233. What else do we got? CIMT was recommended this morning because we came out of this little bottoming action with a gap up, indecisive trading, but then we had the doji followed by a positive open, which told us the profit taking was over, that this is probably going to be in a good 45-degree, somewhat the same trajectory as what started from over here. So this one, all you can do at this point is you can still buy it. I'm anticipating they're going to come up and test the recent highs. And anytime you see a gap up, that usually tells you they want back into this position with great enthusiasm. And that great enthusiasm isn't going to quit most of the time real quick. It's going to follow through and have a good strong uptrend. Kind of the same scenario for F5, FFIV. They gapped it up. They did profit taking. This one, I wouldn't be afraid to be buying on a positive open tomorrow, either the calls or the stock, depending on which ones you like, with the anticipation that they're probably going to pop up at least to the 50, because you've got a big gap area that eventually needs to be filled. So that makes for a good option trade. What was I thinking over there? Oh, HII has got somewhat the same chart as something. I forget which one. But notice we have a doji, little gap up off the 50. Stochastics coming up. Now we're sitting right on this resistance level. If they break through on this one, more than likely you could have wave 3. Here you've got wave 1, wave 2, wave 3 being the same magnitude as wave 1. Should take you up much higher. Okay. Oh, and let's see. Those little scoop patterns, we recommended BOV, ECOV, because anytime you see a flat trading, like we've seen in the handle of this one, then they pull it back, then this becomes your buy signal. Now, if you were normally analyzing this, or most people analyzing this, and I don't know if I want to buy it here because I've got a lot of overhead right here. However, when we can detect that this overhead was very flat trading, they've taken it down, and now they've brought it right back up to that flat trading, and to the resistance level also, the 50-day moving average. If this opens positive, you're going to have a slingshot effect coming out of here. This is the exact reason we were in Rovi. Because Rovi had a flat handle, started popping up through this side, and then they gapped it up through here. Has made for a good, strong uptrend. What is this one? HII? Yes, that was HII we just did. Whoops. Which also has the possibility of a breaking out through this level. And we also went after NetEase this morning because it has a nice little scoop pattern. Let's make this bigger. So it was opening positive, above, trading above the recent highs, did a doji. Also makes this very simple. If this opens positive tomorrow, you buy immediately because that tells us this level isn't acting as resistance anymore, that our little scoop pattern slingshot effect is in progress. And we also bought, I think it was on Friday, we started buying ORLY, same scenario, flat handle. Notice how this broke out, kind of a kicker signal out through the handle, up through the 50, and was looking for a doji sandwich today. It didn't quite do it, but it's still moving in the right direction. So buying the calls on this one is acting well. Now also, notice how big the candle is, or the body is on this candle. We know that a doji sandwich usually represents the indecision day before another big candle, but that candle today wasn't quite as big as that. However, usually the 2 days of the next candles usually equate to that body. So I would still be looking for some more upside on this one. A doji sandwich is a strong bullish day. The next day they do a doji. That means the bulls and bears are fighting. Now, we also know the simple rule of a doji. It's going to move in the direction of how they open it after that doji. So if they open up positive the next day, you want to be buying immediately because that usually represents more bullish sentiment coming in. And usually this day right here, the body of this candle is usually equivalent to the body of this candle. Didn't quite do it today, but it was in that direction. And Potash also had kind of this little scoop type pattern, and it gapped up through that level. Also, another doji type sandwich. You had a doji at the top of this trading range, and then they gap it up again. This candle about equivalent to this candle right here, which also told us that the 200 was not acting as a resistance. Stochastic's not yet in the overbought condition, so you've got a scoop pattern slingshot effect with a gap up, a gap up. That usually tells us there's still going to be more force to the upside. And let's see some of the other ones that look good right now. LNG. Notice this wave up, kind of this wedge pattern. This one needs to be purchased if it breaks out through this level. That means they're going into wave 3, which will be equivalent to this wave right here. And NQ. Whoops. Let's see, NQ. That's the NASDAQ. S.NQ. Here's your left-right combo. A doji followed by a bullish engulfing signal. And notice where it was doing it, right here at the T-line. So you've got a left-right combo, a close above the T-line. It opened positive today, which told us this downtrending channel wasn't working anymore. This one you can be buying with the anticipation that if this is wave 1, wave 3 is going to be equivalent to that. And CEL, wave 1, whoops, got my mouse caught here. Wave 1, notice when it pulled back, how indecisive it is. Hammer, 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 doji, 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 hammer. And then we have a hammer that just touched the 20 and they gapped it back up. This one is a very simple trade. If this opens positive tomorrow, you buy immediately because it's going to move in the direction of how they open after a doji. And they got potential of kind of a doji flutter kicker signal. And it'll be breaking out through this level, taking us into wave 3. So the more elements you can put into your analysis that tells you that you want to start buying, especially on these gap ups, that tells you a next wave is going to start. That's why we recommended MTU today. Because notice where it started going into wave 3. Doji gap up. And remember, Doji gap up is your best friend. If this is wave 1, this is wave 2, wave 3's got good potential of moving up another 15% or so. Also, just kind of watching SBGI, notice what it did today. It gapped way down, was trading down. So this is a case where when you see a doji followed by a gap down, you get out immediately because that tells you which way they're going. However, the reason you get out immediately is because you do not want to be in a doji gap down situation, especially with stochastics starting to roll over. Because the worst case scenario is if they bring it back up through your open, you could be buying it, or if they close it back up above the T-line, you can be buying it, and or if it opens positive tomorrow, you can be buying it. When they gap it down and they take it down and then bring it back up, whatever the news was, when they thought about it, they didn't think it was as bad as what it initially looked like, and that's where the buyers step in. And when the buyers are stepping in, that means they're planning to take it higher. That same thing happened with our UTHR the other day, where they gapped it down here, took it down, and then they brought it right back up again. So this is not an unusual formation at the end of a fry pan bottom. When it starts breaking out, you'll start seeing them start whipsawing it, and then you'll see which direction they plan to take it after that whipsaw. MTDR also has a nice potential, a little pullback, J-hook type pattern, doji. If it opens positive tomorrow, which way are they taking it? They're going to take it positive, and if they take it positive, more than likely they're breaking out through this level, making this your J-hook pattern. Look for more upside. Fry pan bottom, yeah, those type of questions we do. What we don't want to do is individual stocks until we get to the end. But yes, a fry pan bottom is that slow rounding curved bottom. Kind of this slow rounding curve. Notice how indecisive it was. Just lousy trading until they start breaking it out the other side. Now remember, most of the time we're looking for the buy signal in the oversold area. But if we see kind of a lousy trading pattern, which we can anticipate that this is a fry pan bottom, either hang on to it or get out of it, because you know that if this is the dimple, this is wave, or the first part, the second part breakout is going to be about equivalent to over here. And it's usually going to occur where the pattern starts, number one. And number two, it's usually going to occur when the the stochastics are now in the overbought area. So get a lot of questions saying, well, are you buying this and you're already in the overbought area? You are if you can analyze it. Prior to that, there was a fry pan bottom and this slow rounding buildup of investor sentiment. VCLK is another example. We've got this slow rounding, indecisive trading. If it breaks out through here, you want to be buying. Even though you're in the overbought area, the result of a fry pan bottom is usually going to be a very strong price move after that. Let's see. Like a squat teacup. Something like that, yep. All right, I'll take a look at that one just to see if it's relevant. RVBD. Yes, and I don't know what the earnings are doing right, or did they gap it way down after earnings? So if they did, where is it? Gap from earnings came out after market day. Stock is trading at 13. Okay, so if it's down here, once again, you got to see where they open it, because a lot of times they trade it all over the place after hours because there's little volume. See where it opens, and then you can make a better decision. If it gaps down, the first thing you want to do is see whether they're taking it down or they're taking it up. A lot of times they'll take it down, but then they digest the fact that the earnings were low, that something's been pushed into the next quarter or something like that. They start buying it right away. And that same scenario happened last week in UTHR, where they gapped it down, took it down, and then started bringing it right back up again. JC, if you're scanning for different time frames, you got to decide what type of trading you're going to do. In my case, where I'm doing swing trading, I want to trade off of daily charts. So if I'm going to buy based on a daily chart, I'm going to sell based on a daily chart. When I deviate from that, it's because maybe a price has moved exceedingly fast over the last 3 days. And the third day, it opens up and trades up big again. Well, you know there's going to be profit taking coming in at some point, so that's when I'll kick to my 10-minute chart to make sure that it stays above the 10-minute T-line. Is the T-line on the NinjaTrader trading futures on a 1-minute chart? Yeah, it's the 8 exponential moving average no matter what chart you're trading. Okay. Let's see, we close the trade when the stock closed below the T-line. Do you do the same with a stock option? Yes. The option is basically owning the stock. You bought the option based on what the stock price is moving. So if the stock price is moving badly, you get out of your option trade. Even the option still has 50 days? Yes. Why stay into something that looks like it's moving down? Get out of the position. The one big major aspect for trading successfully is knowing when to close out a trade and move on to the next one. And that was always my problem as I was learning to invest. I was a stockbroker for 8 years and had no concept of what made stock prices go up or down. So if my stock that I bought went down, it wasn't because, it was because people weren't as smart as I was, weren't analyzing the same things, and I'd keep hanging on to it until it went down so low I couldn't stand the pain anymore, and I'd sell out. But then the other problem that most investors have is they have a stock that goes up, and their first worry is, boy, would I look stupid if I had a profit and didn't take it and went back to a loss. So they take their profits real quick. So they let their losses run down big time and take their losses real quick. And that's called eating like a bird and pooping like an elephant, which is exactly backwards of what you should be doing. So what candlesticks do for us is they tell us when to get in and when to get out based on what the Japanese rice traders have shown us were high probability situations over the years, over the centuries. No, I buy stocks, options, and commodities and currencies. Whatever chart looks good. What are the probability statistics for candlestick patterns? Tom, I can't answer that. I would just kind of say that over the last 25 years that I'm probably somewhere in the 65 to 70% correct trade ratio, which means that still I've got 1 out of every 3 of my trades are going to be negative. But if I know to get out of a position when I see that the positive trading has disappeared or that the chart is telling me the bears are back in control, I know to get out. That's that old proverbial cut your losses short and let your profits run. Candlestick signals do that very effectively for you. I'll get back to some of these questions. Let me run through some more here. HPQ. Yes, that HPQ has just now broken this downward trend channel. So this one you can be buying. Just make sure it gets through the 50. I still have some options on VHC, yes. And I will make my decision on tomorrow. Now, I would probably guesstimate that this is going to open positive and trade positive because it hasn't broken out of this trajectory of the fry pan bottom. But it has to open positive and trade positive to stay in it. If it opens lower and trades down, you close out the position. Mainly because this should be going this way, not rolling over this way. If it's going to do a cup and handle, I can always buy it back when I see that that's setting up. Paul, I don't buy Delta at all. The Greeks have absolutely nothing to do with the options on our candlestick signals, because as you can imagine, if you were buying the calls on this trade, with it trading sideways like this, and especially like this, the delta isn't very big, so it has nothing to do with what the next action is going to be. That is a bearish engulfing signal, yes, but we're not below the T-line, and we're not in the overbought condition. And I'm still in the O'Reilly options. Let's see, what else we got here? AXS. It's also an example of this kind of this little J-hook type pattern. And this is what we call a flutter kicker. Notice we had a down day. The next day they gapped it above the previous day's open, but they did a doji. This makes it very simple because we know which direction they're going to move it after a doji. So when they open up positive, you buy immediately because the probabilities are they're going to move it positive. And this becomes a very strong signal, the flutter kicker signal, because if you took the little flutter doji out of here, you basically have a very strong kicker signal, which means you're probably going higher. Or not probably, the probabilities are extremely strong that you're going higher. So if you use that same type of philosophy on our recommendation that we did a while back on NIHD, it did a bearish Harami today, or yesterday. Today they gapped it up, or traded it above the previous day's open. Makes this very simple. If they open this positive, they're still taking it up. Now note that we're up here, this is wave 1. Wave 3 is about the same magnitude as wave 1, so this becomes very simple tomorrow. If they open it lower, especially if they trade it back below the low of the doji, you close out the position. Because now in the overbought condition, away from the T-line, you've got a bearish Harami, which essentially tells us the selling has stopped. And then you have a doji. Remember, they're going to move it in the direction of how they open it after a doji. If they open it lower and take it down, or even open it higher and take it back down through today's low, that means the bears have now taken control. Okay, they have earnings on May 2nd. All right. Paul, I usually buy regular daily options, and they're usually the closest time frame, meaning right now I'm buying the May calls. And that's because everything we're analyzing right now is based upon what is that price action doing right now. So I want to get the best leverage I can from the immediate analysis of what the charts are doing. Okay, let's see. We did the double doji, which we saw in DDD last couple of days, and then they opened it positive today, taking it up. EXXI makes these very simple. Or this was more of a double doji over on TCNet. This was more of a doji, which meant when they opened it positive up through the T line, they were going positive. And PKG, kind of a double doji setup here, and then they open up positive and take it up. That means we're still in a good uptrend. And HOS, well, Shuzbus, what's happening here? HOS. There we go. Double doji. Notice the other elements of this price action. Doji's down here, positive confirmation with a close above the T line. Brought it right up to the 50. Basically failed. Came back to the T line. Used the T line as support today, but closed back up above the 50. Now, if it opens positive, what do we got? Kind of a little J-hook pattern, number one. Number two, a T-line crunch. Number three, if they trade a positive, they're basically breaking out through this level. Tells me I've got another uptrend in progress. ML, I mostly buy spreads. I would say probably 80% of my trades on calls are spreads. And this is something that, again, for members, about 2, 3, maybe 4 times a month, we try to do training sessions. We are going to. I was supposed to have done the option training a month ago, but I was up taking care of my mother who needed some attention, and so we're going to be doing about a 4-day training session where probably for an hour in the evening we will go through the spreads, the credit spreads, debit spreads, when to put on a spread versus straight out calls and that sort of thing. So that'll probably be about a 4 1-hour sessions. Is that a kicker on HOS? No. A kicker signal is a big down day followed by a big up day, which gaps up above the previous days. So it's technically, you call it a kicker if you're looking at this, but realistic is a double doji setup. How about how to put on a spread? Yes, we'll be doing all that. What you will probably find in my trainings is everything is very, very elementary, because I don't want to spend a lot of time doing complicated things. I don't want to spend time doing complicated searches. I want to find the stuff that works and get it on pretty quick. Hold on to your individual. We're not anywhere near done yet, I don't think. We've got some more. Now, right now, the rounding bottoms have been working very effectively. When you see this slow rounding bottom and they break out, it's usually going to create a very strong slingshot effect. That's been happening quite a bit in the solars, slow rounding bottom, and then they start bringing it out. Stephen, my side. JSO broke out nicely. TSL. TSL. Another slow rounding curve, breakout. Notice how it broke out. Doji right here. And then they took it positive. And right at the resistance level. BYD was, oops, that's Bud. BYD was a good example of a slow rounding curve that broke out to the upside. This is the type of moves we expect to the upside. And this is a very good place to buy calls, because in 2 or 3 days, because of the time element, you're going to get a very fast move. And First Solar was another one that had a nice slow rounding curve and then started popping to the upside. Tesla. This is what we expect coming out of these slow rounding curves. And notice what broke it out. A double doji gap up through the resistance level, starting a good strong uptrend. Once again, the more elements of analysis we can put in our favor, the higher the probability we're going to see a good trade. Here is a slow rounding bottom with a doji close above the T line. Now when they gap it up, this is a nice thing also about candlestick analysis is if we know what the signals are, we know what the basic rules are. Came up, did a doji right here on the 200-day moving average. If we owned it, what do we do here? Well, it's very simple. They're going to move it in the direction how they open it after a doji, which means in this case when they open it positive, they're still taking it positive. It gives you a quick decision-making process of when to be in and when to be out of a trade. Slow rounding curve, gap up. This is exactly what we anticipate. Now the same scenario. What do you do with this one? If it opens positive, you stay in it. If it opens lower, it better not come back through this level. If it does, it tells you the bears are in control and they're probably going to take it back down to a support level. So with those slow rounding bottom setups, that's kind of what we're looking for, is a slow rounding bottom situation. And then if we know there's a resistance level, if this breaks through, that tells us we've got a good potential pop of that magnitude right there. Let's see, what was that one? P-Lab, I think, is what I was looking for. Slow rounding bottom, just now breaking out. That probably has a lot more upside. Most gaps are earnings or news related. Yeah, so my answer to that is big deal. If something causes a gap, it's because the investor sentiment is taken in that direction and they've made a decision based upon that event or that announcement. Here's another slow rounding bottom that bottomed off the 50. This one, if it opens positive, it means the T line is acting as support. Now you've got that kind of scoop slow rounding bottom. And GRFS, another one that is setting up for a slow rounding bottom setup. Let me make this fatter. But if it opens positive, it's breaking through this level, which means we're going to have a move the same magnitude. And one more that still looks good. Anytime you see a belt hold signal, the probabilities of a strong move after that is pretty good. The reason for that is whatever this signal or whatever this news was, and they opened it down here and the bulls stepped in, means the bulls stopped up a lot of sellers and there's no sellers in front of them. Now this trajectory of this next move is pretty strong. Okay, let me see what I've missed here. Does your scanning bring up those examples you were showing before they already have taken off? A lot of times, because of something already in the scanning, it'll probably find it and, for example, there's a bullish engulfing signal. Might not have bought the next day because it opened and immediately started trading off, but this is now on a watch list. Because where did this bullish engulfing signal occur? Right here near the 50-day moving average. Stochastics getting down toward the oversold area. So it's already on a watch list. So it's probably picked up this pattern already previous. A belt hold is when they gap it way down or way above the trading range. And then they bring it back up into the trading range. It doesn't have to do a signal. It doesn't have to do a piercing signal or a bullish engulfing. Just a big gap down, brought back up into the trading range. And it's called a belt hold because this is where the two sumo wrestlers are fighting. One's trying to back out of the ring. The other one's grabbing him in his belt and pulling him back into the ring. And then they're off to fighting again. Okay, I think that's about all I've got for tonight. Looks like I may have missed this one. This one's the same scenario, rounding bottom, gap up. Big long-legged doji. They opened it lower but didn't take it anywhere. Now they've taken it back up, which means the profit taking is over. This one you want to be buying. Why? Because this is the message right here, that somebody wanted to get into the stock with great enthusiasm. They did some profit taking. Now that the profit taking is over, probably the great enthusiasm will stop back or step back in again. What is the idea? While it's ideal, While it's ideal to enter while the stochastics are in or turning into an uptrend, if the stochastics are quite high, overbought, should you still take a trade if the candlestick signal pattern is there? If the pattern is there, yes. And usually with a signal at the consummating that pattern. And also, once you're in the trade and the stochastics turn down, e.g. from overbought, but no close below the T line, should you only close below the T line, disregard stochastics? Yes. Just because stochastics are in an overbought condition doesn't necessarily mean that the trend is over. All that tells you is you're in an overbought condition and the trend could continue that much further or continue that much more. Where can we get the formula to find a doji followed by a gap up? Most of that, Cruiser, is right on our website somewhere. Or if you're in the chat room and during the day, can just say, can somebody give me the formula for the best friend, the doji followed by a gap up? And somebody will put it in and you can just cut it and paste it. We'll give you pre-market gaps to give clues. Yes, that's why you want to see what the market's doing the next day based upon what your previous day's signal was to tell you which way it's going to go. Dick, I don't know the answer to that. What was that pertaining to? Can the symbols on the charts be a bit clearer? I don't know how to do that. They've always been like this. This is why I usually try to mention the chart symbol. So you buy after the gap up and confirmation or after a close above the T line. Most of the time, yes. What do I say? The deviation from that is the further away you move from the T line, the higher the probability they're going to move back up. So if I see a candlestick buy signal way away from the T line, then I know my first target is probably back up to the T line. And if we're right near the T line, I'm going to buy once that signal closes up or once the trading closes above the T line. Why do you not use volume? Because volume has nothing to do with price. If you're in an uptrend in a stock and nobody's willing to sell it, they're going to take that price higher on lower volume. Now, the times that it does become a credible factor is if you see, this is a bad chart, let me get to something that might have, if you saw a kicker type signal right here and it was on huge volume, that pretty much tells you what happened. That the weak have sold into the strong, or the strong have bought from the weak. So if you see a big volume day at or around where the reversal is, either the day before or the day after, that's usually an indication there's been a lot of exchange of volume at that level. But a lot of people say, oh, I want to see volume go up as the market goes up or as the price goes up. Volume and price have absolutely nothing to do with each other. You're buying price. You're not buying volume. Where can we get the formula to find a doji followed by a gap? Okay, we answered that one. What's the largest body range ratio of a doji? All you really need to see is that it's an indecisive trading day. Now, if it's not a doji, it will be a spinning top, which basically looks like a doji, but it has a little bit bigger body. So what that represents is indecision between the bulls and the bears. It doesn't have to be an exact formula Let's see, we're still on a bad chart. What was some of the other charts that we looked at that had some, can't even think of which ones they were. Let me just pick DDD to see. Yeah, sometimes the body is going to be a little bit bigger, but it shows indecision, especially if you're at a major support or resistance level. When a bullish pattern sets up and you say buy immediately, if it opens positively, do you not suggest waiting 15 or 20 minutes after the open? Not necessarily, Dennis. If we think the market is going to open positive the next day, which means the stocks that we want to buy is opening positive the next day. For example, if we're looking at DDD this morning, thinking, all right, if this opens positive after our double doji, we want to be buying. That doesn't necessarily mean we buy that first second or first 30 seconds. Maybe in 1 or 2 minutes we see they're still taking this higher. Then you jump in. Now, there's a lot of times people say, well, it opens positive and then starts trading off. Well, usually by the time you could type in that you want to buy this, you're already seeing it start trading off. That tells you they're selling it after the open. It becomes very simple. You just put your buy stop back up where it opened, because if it comes back up through there, after they opened it with some profit taking and then did exactly what we suspected it to do. On the other hand, if it opens positive and continues on down, you're not in the trade. Yeah, again, volume is, that's true too. Volume is a factor, but that's why you do your scans. My scans are, I'm looking for stocks trading greater than $5 a share and trade on an average of 200,000 shares a day, because that takes your universe of stocks pretty much from 7,500 down to about 2,700. And out of 2,700 stocks in that universe, I will never have problems finding more stocks than what I can handle as far as trading on any trading day. Yeah, another good scan is looking for the dojis with stochastics in the oversold area, and then see which ones have the biggest percent move on the open the next day. That will usually find your doji followed by a gap up. Okay, is a buy stop appropriate? Yes. Quite often I will use a buy stop if I don't want to sit and watch a position trying to come out of a fry pan bottom. Let me see if I can find, let's say I was wanted to buy VCLK right now. And I didn't know how many days it's going to take for this to break out. I'll just put a buy stop right up here at the level that if it comes up through there, I know I've got a breakout. I don't have to sit there and wait for it. Very simple on a buy stop. When you put in your order, it'll ask for a market or a limit order or a stop order. When you put a stop order, let's say it's trading right now at 30.36. I put in an order at 31.05. I'm going to put an order of buy X number of shares at 31.05 on a stop, which means if it touches 31.05, my stock or that order turns into a market order. I don't see a pink line on the daily. I probably don't have it on here, or on this one. There's the 200. Yeah, my 34 may not be on this chart tonight. Are bull put credit spreads good for trading breakouts? No, because it's basically a low income or low profit but high probability trade. If we see a breakout, we know we got a big strong price move, so that's probably going to be a buying the calls outright or doing some sort of call spread. Where do you place your stop loss? At the level that would tell me that pattern isn't working anymore, or the stock price has moved back to a level where it's showing that the bulls aren't in control anymore, the bears are in control. And let's see, one tick is 1 penny, just above the previous high. Now I forgot what the other one. So a lot of professional money managers say, oh, you should set your stop loss at 6%, 8%, 3% below where you bought it. The market doesn't give a hoot where you bought it. You're buying it based on visually recognizing a pattern or a signal that tells you the bulls are in control, and you're going to come back out when you can visually see that the bears are back in control. Some trades that is 0.3%, other trades it might be 15%. But again, it's based on where would be the level that would tell us the bears are now taking control. Placing stops varies. Yeah, okay. What is your favorite source? So, Ed, a lot of times if I'm looking at my watch lists on Metastock or TCNet, you can see where, especially on the NASDAQ stocks, you can see where the bid and ask is. Also, I think on TOS, if you have a watch list of your stocks, you can see what they're doing pre-market as far as the bid and the ask. And then what I do is I usually have CNBC on the TV, but I have it on mute, and that way I can follow the pre-market futures right up to the open. And that gives me a pretty good idea of what I want to do. If I see the pre-market futures in an uptrend, or the market in an uptrend and the pre-market futures opening positive, then I know I've got a pretty good probability that things are going to move positive that day. I'm going to be a buyer. If I'm ready to be a buyer and then I wake up and tomorrow and the pre-market futures on the Dow are down 90 points, that's not indicative that the buyers are in this market. I'm not going to be too anxious or rush into it buying anything until I see whether the market settles down and starts back up again. Or if the stock does open positive and is steadily moving up when the market is moving down, that tells me that stock's moving based on no consideration of what the general market is doing, that something else is going on. Then I'll step in and buy it at that point. No, I don't trade that quickly, Warren, to use a level 3. Now, when I used to do SOS trading or traded the E-minis, I'd use a level 3 to see what the volume was on each side. Yes, and there's other places you can go to get the pre-market information. Also on TOS, I'll put the YM indicator on the very top of my watch list because I look at that first, and it pretty much tells me what the futures are doing before the market opens. What you were saying, it takes practice, which is always true. Yes, I give the example many times over that each spring training, pitchers are gone through the exercise of when somebody bunts it down the first base line, they know how to come off the mound, pick up the ball, and throw it to first without hitting the batter. And they practice it over and over and over. Now, these are professional baseball players that have probably practiced that move thousands of times every year. But like anything else, it's got to kind of be put back into your memory banks and your muscle memory so that you don't have to think about it. You just do it. And that's the same thing with investing. TOS is Thinkorswim. That's one of the trading platforms that is good execution for your trading. And the YMs are the futures for the Dow. Yes, golfers hit at least that many golf balls every single day. Okay, if I've missed any questions, you can put them in. Otherwise, Jim, go ahead and do the double line. And in 12.3 seconds, Jim, do the other double line. Okay, I got to go back up here and okay. TITN. This one you can be buying on positive trading tomorrow. Your first target obviously is up here at the 200 fill in this gap. Shows butts. And DSX. DSX isn't working. Are you looking for CSX? Which is coming out of a rounding bottom. If it opens positive, you can be buying this one on the breakout. ACAD, this one isn't real healthy, but as long as it stays above the T-line, notice the type of trading it's doing. This is why the Japanese say watch or let the market tell you what the market is doing. It moves up, moves sideways, moves up, moves sideways. As long as it stays above the T-line, you can stay long. LGF, another one, same scenario. As long as this one stays above the T-line, this one's kind of a steady eddy right at this point, or as long as it stays above the T-line, you can stay long. Rambus, another one that's come up through the T-line, good J-hook pattern. Another one where you want to stay long. At this point, I'd use today's open as my stop and use that on the way up. ABX, setting up, but I need something to tell you that they really the bull is stepping in. Otherwise, yeah, this one's gotten a little bit lethargic. And CYMC also has that little scoop type pattern. If this opens positive, you can be buying because it tells you they're breaking out through the handle. Let's see. Crocs. Crocs is in a trend channel, but it's now heading back down. If you own it, you stay in it as long as it doesn't close below the T-line. But it definitely, obviously, has to break through this upper resistance level. It's not one of the, I wouldn't pick that out as being a great chart to be in. And INCY closing back below the T-line today tells you probably want to be out of it. If you are in it, if it opens lower, you get out immediately. The only way to stay in it is for it to open positive and trade positive. Caterpillar, after the big reversal type signal here, as long as it stays above the T-line. Now, you just now, looks like it's broken out through this downtrending channel. First target is the 50-day moving average. BAS, this one, double bottom off the 200. This one you can be buying still. Then use the 50-day moving average as your stop. BONT. This one did a doji harami today. Same scenario. It's going to move in the direction of how they open it. If this one has to open positive and trade positive to stay in it. Maxwell, as long as it stays above the T-line, you still got the fry pan bottom trajectory. You don't want to see this close back below the T-line. HGG had been acting very well, but it's starting to get a little bit soggy. So, but the one criteria that has held this one up, except for one day, is as long as it doesn't close below the T-line, you can stay with it. ECYT did a little bit of consolidation right up here at the resistance level. This one, if it does another indecisive day, we can tell that it's having trouble getting through here. This is where you put your buy stop. You come up here to around 1455. If it comes up through there, it tells us it's breaking out into new territory. UNXL dropped off pretty much, but it didn't close below the T-line. And I could see after hours it was trading up 50 cents or so. But this one you stay with as long as it doesn't close below the T-line. Now, I say stay with. I closed off half the position today with the idea that if it opens lower, I close the other half. If it starts back up, I'll buy that position again. But just to get some protection that it doesn't open lower and start trading down. Dow Chemical, this one you stay with. Looking for it to break out into new territory after the gap up. You're still just now climbing in the overbought area. And KORS. Double doji setup. Very simple. If they open the positive and come up through the 50, you want to be a buyer because it'll be breaking through this resistance level. Stochastics are still heading up. You've got a kicker type buy signal. First resistance was the 50. Now it's indecisive profit taking. If it opens positive, they're taking it up through. And IVC. IVC was one that looks very good with that belt hold. Again, the belt hold is when they gap it way down below the previous trading range and bring it back up into the trading range. In this case, they did a big belt hold, bullish engulfing, which essentially tells us they've got all the sellers out of the way. Now you've got the potential of a doji sandwich. Now, there was a doji. There was a potential doji sandwich. Only came up this far today. However, there's usually a correlation that if they don't take it up all the way the first day without being in the overbought area, in 2 days they can take it up. So that still becomes your target up here at the 50. And SLCA, this one, nothing really fantastic there. You're in a downtrending channel. I'd rather buy it on a strong buy signal that breaks it out of the trend channel. EVR, there's your bullish engulfing that took you up through the T-line. This one, all you need to do is stay long as it stays above the T-line. Amazon, this one you stay short. Notice the kicker signal that took it down. You stay short until you see a buy signal. And HMA, this one had a hard time getting going. If you're in this one has to open higher and trade higher. If a trade opens lower, that tells you they are resisting here at the 50. You want to be right back out of the trade. AZNs came back up through the T-line today. This one, you stay long now until you see a sell signal. And First Solar, whoops. This one, you stay long until you see a sell signal. CLF. Kind of caught in between. Looks like a little T-line squeeze. You're moving sideways. I would rather pay for it up above the 50 knowing that it broke out. You've got a good possibility it's going in that direction because you had a little rounding bottom, a bunch of doji, indecisive trading days with a gap up, hit the 50, it's pulled back. You stay with it as long as it doesn't close back below the T-line, which it doesn't look like it's going to because, number one, you've had a gap up. Number two, your stochastics are still heading in an upward direction. TWI, this one did get through the 50 on kind of this little scoop type pattern. This one you can be buying on positive trading tomorrow. Just use the 50, which will be the halfway point of this candle as your stop. And U.S. Steel, this one can also be bought on positive trading. If you're long, just don't let it close back below the T-line. And Mako. Mako, slow rounding curve. If this one opens positive tomorrow, you want to be a buyer. Cree, caught in the sideways mode. You're in a slow uptrend, but again, still in a sideways mode. Not doing anything that would want to rush into this one. Under Armour, the same scenario here. This is sideways. Stochastics heading down. You're sitting right on the T-line. Nothing here to tell me there's any great buying. The sell came from the dark cloud, and you're seeing more sell signals. I'd be trading someplace else right now. RPT, S.RPT. There's a nice slow rounding curve. This one you want to be buying on a positive open. Notice what they did right at the level that it should be breaking out. They gapped it up through there. That tells you there's going to be more upside. IVE, is that the S&P Value Index? This one is still in a slow, steady uptrend. Stay with it. S.GSX. Did I do something wrong? Well, apparently I did. Diana Shipping. This one you can buy on positive trading. Kind of a Morningstar signal today, right at the 50-day moving average and closing above the T-line. That's a good-looking chart. And CSC, cheese futures. I don't think that's what you're looking for, is it? CSC. Dojis above the T-line. Now they're taking it up. First target right now. Let's see, we can try and make this a little bit more hefty. First target right now, after a doji gap up, is probably at least the 50-day moving average. And St. Jude's, another one that I wouldn't get real excited about. As you can see, it's caught in this wedge formation. I'd rather see it break out one way or the other. If looking for a positive open, a stock opens up and then sells down, do you get out right away? Not unless it does a severe sell signal. Like number one, closes below the halfway point of the previous candle. So if this was my buy signal, which it's not, let's see if I can find something. But let's say this was a buy signal, a big bullish engulfing signal, and it opened positive, I wouldn't want to see it close more than halfway down that candle. Number one, in this case, because it would be halfway back down. The Japanese rice trader say if a bullish signal tells you the bulls are in control, if the bears are able to close it more than halfway down that candle that told you the bulls were in control, the bears are still in control. So yes, you do get out of it right away. If the bullish confirmation was there to tell you it was going higher, you shouldn't be in a stock that's trading more than halfway down the previous candle. Here's another one that's doing kind of a slow fry pan bottom. This is a case where I'd put my buy stop right up here somewhere, because if it came up through there, it tells me it was breaking out to the upside. And CTSH, bullish Harami. Now this is a case where when it moves that far away from the T-line, I might buy it because now the T-line becomes your first target. So if I was buying here and it failed at the T-line, I could probably still get out of it with a little bit of a profit and move on to the next one. But with a bullish signal confirming, the obvious is they're taking it up at least to the T-line. This is what you call the flutter kicker, where open positive, the next day they gap it down, do a doji, and open it lower the next day. You want to be shorting immediately. That tells you there's going to be a lot of force to the downside. And ASX, whoops, I don't want to do that. ASX. This one opened lower. This one would have been one of those situations where if it opened lower and headed down, you stopped out immediately. But then when it came back up through the T-line, you could be buying back, because at least on the 10-minute chart, you can see that they're buying again. So you're buying when you know you're moving in the right direction versus holding on to something that might be heading all the way back down in this direction. And Cena, here's a case where this is a strong buy, but notice what they did today. This is a case too where if they open it and they take it up, you just put your sell stop 1 penny below where it opened, because if it comes down through there, there's profit taking going on. So if you were in it and got out, now you just watch to see when there's a signal and the buying steps back in, because the message is there. They gap this up for some reason. Now there's profit taking. We're just waiting for that profit taking to end, and that's a good thing that we've got going for us with candlestick analysis, is because we know where we can grab for the fallen knife. We'll get a signal showing when the buyers are starting to step in. Here's another slow rounding bottom that can easily be bought on positive trading. Just make sure I think Eagle's got big enough volume to get in and out easily. And PBR, this one with a gap up in the oversold, overbought area, I would suspect they're going to hit the 200. And that's, again, when they've stretched to get from an oversold to an overbought position to a resistance level, go to your 10-minute chart or even your 5-minute chart. If it's showing that it's struggling to get through, you probably want to take off at least half your your position, take profits, and then watch to see what it does from there. If it starts backing off, you can close the other half. Then you can always put a buy stop one penny above the breakout area. Apple, also doing kind of this little scoop pattern. If it breaks the 50, you want to be a buyer because that's going to be your bottom. There's your little morning star signal and a belt hold signal, then trading up above the T-line. If it breaks through the 50, it's breaking through the handle of the scoop pattern. Gives you a high probability with stochastic still heading up, you could have a slingshot effect to the upside. And NPSP has been acting well. All you can do in this one is stay long, fry pan bottom, breakout. Indecisive trading, wave 3. Indecisive trading, we earn wave 3. Now, when this wave and this wave get pretty close, which is trying to do, at this point, I would probably use today's low as my stop. If it came back down through there, at least there's going to be some profit taking back to the T-line. HZNP. This one I would not be in. It's having a hard time getting through this area, and now we've got kind of a little flutter kicker signal to the downside. It might support here on the 50, but I'd be out of it waiting for a strong buy signal. SBGI opened lower, traded down, and then came right back. So if you stopped out, which was the right thing to do, and if you didn't buy here or buy on a close above the T-line, all you do is wait for an open above the T-line or a positive open tomorrow. That tells you exactly which way the trend is moving. They can't close it below the T-line. So this is a case where I would much rather close it out here, knowing that they've gapped it down from a doji with stochastics heading down. That's a pretty good indication I want to be out of it. But I have no qualms about buying it back up here, knowing that they're still moving up positive by the end of the day. INFA. This one, again, you saw the profit taking from all the way back down to test pretty much the T-line. This one, I would rather buy back up above the 50-day moving average. That would tell me that the bulls are back in the trade. And LNKD, LinkedIn, Doji's up here, not quite overbought. It needs to break out to the upside to kind of confirm this kind of slow rounding bottom also. Would you say that a different suite of stocks might perform differently and that it's wise to understand the suite prior to engaging each parameters? Some of them trade differently, but they all kind of trade in their own fashion during any particular time. For example, we could see that there was quite a few of the solar stocks that had patterns as rounding bottom and then they were taking off. So if you see that happen in quite a few of the stocks in the industry, that gives you a good indication that they're buying the whole industry. And that's where you want to be. You definitely want to be in stocks where the buyers are coming in across the board instead of that one renegade stock that might be moving up in a down industry, which, for all we know, that might be profit taking, or I'm sorry, covering of short positions. So, yeah, and you kind of, but usually stocks will trade well for a time frame, and then all of a sudden they fizzle out, and another sector, another set of stocks act well. ACCOs, that belt hold, this one you can be buying on positive trading tomorrow. Google is in an uptrend as long as it stays above the T-line. And FSL, this one needs to stay above this level. Now, they've broken out through this resistance level with a gap up. Now you want to see that 45 degree coming off of there for more uptrend. Let's see. Netflix also is not backing off. Notice that every time they take it down, they take it up, back up again. more than likely it's going to move sideways until the T-line catches up, or you see kind of that little scoop type pattern. So I wouldn't sell unless I saw a close back below this level. And TIBX. Another one that can easily be bought on positive trading because they're going to move it in the direction of how they open it after a doji, which means probably the 200-day moving average, or I'm sorry, the 50-day moving average is your viable target. Vivus. This one you stay long until you see a sell signal. RAX had been rolling over. Now it's coming back. Notice how it rolled over here and now it's starting back up. This one you can be buying. They're kind of your doji sandwich. Let's see, we can probably make this big enough where we can all see it. Kind of your doji sandwich today. T-line acting as a support. I would suggest or imply that the 50 is your next target. GDX. This one, all the oil stock, or the mining stock kind of got flat today. This one has to see a strong buy signal coming off the T-line to get into it. If it does, they're bringing it back up to the 50. But I wouldn't be buying it unless I see something real strong in these. Now, FOE was another one that we would have been buying yesterday on positive trading, but it didn't, and it still hasn't. But I would still have a buy stop right up here. But if it comes up through that level, it's breaking out of this kind of slow, flat fry pan bottom. And CBI, another one that needed to be opening positive and trading positive, which it didn't. Another one that I'd be more apt to have a buy stop right above this level, but if it comes up through there, it's moving in the right direction. And LCC, notice the big bullish engulfing signal right off the 50. This one you stay long on, as long as you don't see a sell signal. Ford, this one you stay long as long as this trades up above the T-line, or stays above the T-line. And this one needs to open positive and trade positive because you're still caught in this downtrending channel. It needs to break out through that level. And you'll get a good indication tomorrow by how they open this one after a doji. And McDonald's, this one you can be buying. Obviously an option trade because the magnitude of return isn't all that fantastic. So this is, again, more of an institutional trade where they buy it and hold it. It's harder to trade it, though. Is today's good day for entry? Think or swim? Profit charts with stochastics? Should I use slow stochastics? Slow stochastics, I use 1233. Only for the sake that through the years I would just go back and say, all right, where does my stochastics peak with the top, and where do my stochastics bottom with the bottom? And 1233 seem to work best for the type of trading that I do, which is more of swing trading. Goodyear needs to open positive. The profit taking, but they couldn't close it back below the T line. If it opens positive, they're bringing it right back up again. Let's see, EFA. Whatever that is, I've never seen it. That's the index funds. All right. This one you stay long until you see a sell signal. KERX just can't get out of its own way right now. It's stuck in a sideways mode. Doji, again, Doji right here on the T line. They're going to move it in the direction how they open it tomorrow. We did BOMT, JP Morgan. Back up above the T-line and staying above the 50, but it needs to open positive tomorrow. And if it opens positive, it's kind of one of the bellwethers that tell you what the general market direction is. Wells Fargo, this one needs to open positive and trade positive to stay in it. Bank of America. Bank of America is pretty much sideways now. I wouldn't be long or short this one. You're in the overbought area. It's kind of getting toppy. I'd rather, there's probably better ones to be trading. even for a longer term trade, this one is kind of fizzled. And this one you can go short if it opens lower, because you've got sell signals that brought you back down through the T-line. Notice the last couple of days they tried to get above the T-line, but they couldn't. Stochastic's still heading down. If they open this one lower, they're probably taking it back down toward the 50. MCP. Whoops. S.MCP. You're caught in between the 50 and the T-line. I would rather buy it as it broke out through the 50, which also would be breaking out through this level off a double bottom. There's your left-right combo. If you own it, you just stay with it as long as it doesn't close back below the T-line. And GY, S.GY. Notice the pullback is very indecisive. You've got your best friend right here, Doji gap up, and when they're pulling it back, it's not decisive. This one, you put a buy stop right up here. If it comes up through there, that's kind of your method's rising, which means they're going to be taking it higher. And let's see, that was GY. Let's see, IWM is the Russell 2000, still in a nice uptrend. It is in the process of breaking out through this level, and then it needs to break out through this level. And Kohl's, big bearish engulfing. It needed to get through, obviously. Now you're still in this sideways mode. I would not be long or short this stock unless something big's knocking it down. EGHT, this one needed to open positive and trade positive to stay in it. Now you've got kind of that inverted hammer signal. If it opens positive, you can still be buying this. It's still staying above the T-line. And CENX, this one, you want to see it break out through the moving averages. Let's see, we did JKS, Roundy. Roundy, you can stay long as it doesn't close below the T-line. ADSK, this one you stay long as it doesn't close below the T-line. Did ACAD, ONN. If this opens positive, they're taking it back up to the 50, which is lots of juice left in the stochastics. And CADX, this one needed to close back up above the T-line to stay in it. Stay in it as long as it doesn't close back below the T-line. And OVTI. OVTI did a hammer signal, and it came back up above. Look for this as a target, which would be a breakout of this area, or testing of that area. Schlumberger, as long as it stays above the T-line, also, obviously, the first resistance is at the 50. And is this CarMax? Getting a little bit toppy up here. I would probably use today's low as my stop. If it came back down through there, you want to be out of it. Caterpillar, you stay long as it stays above the T-line. And UPS. This one, you stay long because you've had this kicker type signal. You're breaking out through this level. You're in a 45 degree. You're probably going to be in a 45 degree now for a little bit. And PIIB, this one you stay long as it stays above the T-line. At this point, I'd probably be using today's open as my stop. It shouldn't come back down through that level. Lulu, this one staying above the T-line. You stay with it. And CMI. This one needs to get through the 50, obviously. All you can do right now is stay long until you see a sell signal. And CJES. Little morning star signal right on the T line. This one opens positive. It's coming up to the 200-day moving average. That's a good high probability trade. JNS, is that Janus? Yep. If this opens positive, notice it came up through the 50, supported on, up through the 200, supported on the T line and the 200. If it opens positive, they'll be taking it up to the 50-day moving average. CROS, S.CROS. Oops, if you were looking for Crocs, I think we did Crocs earlier. And WLT, this one you stay short until you see a buy signal and a close above the T line. Hasn't happened yet. This one you can be shorting if it opens weaker tomorrow. It tells you that you got kind of a J-hook, very J-hook pattern failing at the T line. And FXE, the euro, this one you can be buying on a positive open tomorrow. S.IBM. IBM did a doji positive trade above the T line. If it opens positive tomorrow, you should be watching for it eventually to get up to the 50-day moving average. I think we did BAS. Yes, that one closed above the T line. Okay, this is recorded. What is a muffin top? A dumpling top is a slow rounding top, the opposite of a fry pan bottom. You get ready to short because usually it's going to have a strong downside move. It's that kind of investor sentiment building up in a bearish direction. I think we did GLD. S.GLD. Yeah, slow uptrend. It's almost filled this gap. Might have. Just, I wouldn't want to see it trade lower tomorrow, especially back below today's open. Okay, a few more. CTSH. Oh, that one's trying to come back up to the T line. All right. Yeah, sometimes it's better to get out and come back in. I can't recall how into the room. How I got into the room. Whoever asked about Cree downgraded after a lackluster earnings report, okay? Let's see. CAVM. This one you can buy on positive trading tomorrow with the anticipation they'll probably bring it back up at least to the 50 because it looks like a wee little teeny gap right at this level, which would correspond with the 50. And Con Ed, stay long until you see a sell signal. And CMCSA. This one you can be long, but it definitely needs to break out or you're kind of in a lethargic sideways stock. I'd probably be looking at something better. And, whoops, that's soybeans. S.S. Sprint just did a Morningstar signal back up above the T line. This one you can be buying. Am I on the daily? No, I'm on a semi-annual. How did I do that? Gap up, move sideways. Yeah, remember, using the candlestick signals gets you away from having to listen to any of these analysts out there, remember, when an analyst makes an opinion, it's just one person's opinion. Yeah, and that's why you don't put the sound on during the day, because you're not interested in somebody's opinion, you're interested in the market opinion. Lulu still an uptrend, and HOV, whoops, S.HOV. This one's having trouble getting through the 50. There's a left-right combo, so if this opens weaker tomorrow, you definitely want to take your profits. MLNX. Kicker signal to the downside. You stay short until you see a buy signal. And Nuance. Stay long as you don't see a sell signal and a close below the T line. A left-right combo is a doji followed by a bullish engulfing signal. Doji followed by a bullish engulfing signal is usually an indicator that there's going to be a very strong follow-through. We did CLF, Bidu. Bidu is sideways. I wouldn't be long or short this stock. There's nothing here to tell us the trend. Yes, but remember, when somebody gives their opinion, it's just a temporary supply and demand change. Okay, I guess that's about all we got for tonight. Everybody keep in mind, we're now trying to make plans for private training sessions up on Keuka Lake this summer. So if you like a nice entertaining spot where it becomes very comfortable to really get all the elements of candlestick analysis from start to finish, when you do that, when you come back to these sessions, you're not in a learning process, you're in a confirmation, reinforcing process, making your trades better. So with that, we'll see everybody in the chat rooms. Have a good evening.